Hey everybody, welcome back to Rebel Trading. We're going to do a quick little weekly review here of the markets and see what we can't decipher here. So we'll just jump right in on a weekly chart of Bitcoin. In my previous post, I had mentioned during this rally up, I didn't really have a lot of confidence in this rally because of this declining volume here. So that was kind of a warning sign whenever you get rising price on lowering volume. It's kind of it's just not a good sign because the markets really need volume in order to, um, that's the lifeblood of the market. So you're not going to get any sustainable moves up without actually having the volume there to support it. So yes, buyers were coming in, but the volume was declining. Can't really expect prices to keep pushing higher, at least on that short term. So we did meet resistance here on this trend line, and we got a rejection here. So definitely expecting this downtrend to continue until we get confirmation otherwise. We have a weekly downtrend going on, and those larger time frame trends take a little bit longer to um, reverse anyway, to see them actually reverse. So what we'd want to see is a break above this swing top. If we got a higher low, once we broke that swing top, prices up here would confirm a weekly uptrend. The other thing we have to look at as far as Bitcoin goes, when can I expect higher prices? Can't really expect much higher prices until Bitcoin has an overbalance in time and price to the upside, meaning this correction right here, or excuse me, this rally right here, that was the strongest rally in this entire downtrend. So if we could beat that in time and price, meaning if we can push prices up higher for longer, that's going to give us more confirmation that the bottom is in. We're not trying to catch the bottom, but if we can find that bottoming structure and have that signal, it's going to give us a lot more confidence that the market is going up. So, or that the bottom is in. So, and that actually is really nice because you have some confluence between this overbalance in time and price with these bottoms here and this 50% level. So all those would just be really good signs of strength and would help confirm that the bottom is in fact in. And then we start breaking some more tops, especially on the weekly time frame, is going to be more confirmation, like breaking above this top here. And this little faint trend line that you can barely see is actually a trend line from way back here from the previous cycle, top to top. And if I actually take this off of logarithmic quick, you can see how for a time Bitcoin was respecting this trend line until it finally did fail and break lower. So anyway, that was another thing I'm tracking. There just happens to be another trend line that we can go back to and just have it in our tool belt, and know that if we close above that and we start seeing more strength, it's just adding layer and layer of strength. But right now, we're just seeing more weakness in the Bitcoin chart underneath this trend line in the lower half of this 50% tool for this move. One thing that I have drawn up that I haven't shown before is the 50% level of the entire run. So technically, we're still in strong territory for the entire bull market, and we would technically be in strong territory all the way down into $64,000 or so. I don't necessarily expect prices to go that low, but everything's possible. You can't rule anything out because the market will make fool. Basically, the markets are designed to fool most of the people most of the time. So anytime you think you got it figured out, you better check yourself because the market will definitely humble you. So anyway, but I am seeing a lot of support on these tops right here. I would absolutely expect some strength, or excuse me, some buyers to come in. And then if I put a 50% tool for this particular run up, let me just get rid of this. It's getting a little noisy. Yeah, so you can see we've closed above this 50% level so far, as far as this range goes. So yeah, that's kind of a balanced correction. Like usually the market will go up, come back down to its 50% level, and if it gets a nice push off of there, you have a little more confirmation that you're in strong territory and you're going to continue to see more strength from there. So far we're holding nicely above this particular 50% level, and so we'll just track that for strength. And we're kind of coming at a crossroads here where Bitcoin I think is going to make up its mind here pretty soon. Let me take this off a log real quick because I don't necessarily need it for this particular run. anyhow, so we have this nice trend line here. And so we're kind of coming at a crossroads here where, any breakdowns below this trend, probably going to see further prices to the downside, maybe revisit this 50% level. It should be the major 50% level for the whole bull market. But I do want to mention, while the entire market is just absolutely losing their ever living minds over this correction and saying that the top is in and it's all over, you hear a lot of that because that's basically what markets do. They climb a wall of worry. And if you were to plot the news events on each of these lows, there were very terrible news events that happened on each of these lows, and then the markets continued higher. So it's a good sign that the markets are fueled for right now, because that means that in general, most of the sellers have sold. And once the sellers are out of the market, what else can you do? Buyers come in. So as you can see, so far this bull market, 21% correction, 21% correction, 24% correction. We're all in, it's all within, yeah, see, there we go. 32% correction there. And bam, like a 33% correction there. So, yeah, so I mean, so far this is a pretty measured correction. It's nothing different than what's happened before, but you're having extreme fear come in, even though we basically just hit our normal 20 to 30% correction in Bitcoin. You need corrections in a bull market because you need to get rid of weak hands, basically. A lot of the people that came in late because they didn't have they weren't comfortable getting in the market until prices were up here. And then, of course, prices go against them and then they sell. And so basically the short-term holders end up capitulating, but the long-term holders see value here and are looking for areas of value where they want to get some Bitcoin. So that's kind of what you look for too. And also, just on a broad sense, if I were to take away all of the drawings here, really what we're doing is we're just coming to retest these highs. That happens so often in markets. You can go back time and time again when you break into all-time highs, come back for a retest. But that happens over several months, and people don't have the kind of patience to just sit back and watch these things play out. They're just zoomed in on the daily chart or the 4-hour chart, trying to guess what these markets are going to do. And what I found is you're better off following what the market's telling you it's doing rather than trying to guess what it's doing. So that's what I have on that. So far, measured correction. We did come up into resistance, and not until we break above these tops here, or excuse me, this time and price, are we going to have a lot more confidence that we're done with that particular downtrend and we've created a bottoming structure, and we should be going up from there. According to our liquidity models, if I put this back on a weekly time frame, what we can see in the liquidity models here, which I've mentioned before, Bitcoin lags global liquidity by about 10 weeks, and we've shown a bottom. And you can see how this chart has called the tops and the bottoms very nicely, at least in the short term, in the last year or so. And if you go back and back test this even more, there is an air gap here. We had the ETF hype. So, Bitcoin was able to kind of go up during this period where global liquidity was coming down. Bitcoin was able to push higher. That does happen. It's not like it's not a perfect model, but anyhow, it's just something to keep in mind, is that we may, over the course of April and May, it looked like the global liquidity was on the rise. And so basically what that is the M2 supply is the real money in the system, in the bank accounts and everything. And so as global liquidity increases, Bitcoin benefits from that because it is a global asset. And so some of that money ends up finding its way into Bitcoin. So anyway, now we have an idea of what we're looking for. Right now, we're in a weekly downtrend. Going to expect more of the same until different. We have some targets. Basically, once we've hit these prices above this 50% level, which would be added strength, that will give us our overbalance in time and price. And then we can expect higher prices. That's actually what happened back here. If we were to do the same thing, we had that signal right here. And if you'd have bought that signal right here, even coming back down for a retest, you'd have captured a lot of that move, and not been involved in the emotionally volatile times where prices going sideways and down and a lot of chop and there's a lot of emotions involved, at least if you're glued to the screen. So, which I honestly don't really advise. That's why I kind of like I think weekly reviews of the market are great, because there's a lot of noise in between and you'll end up getting excited. Like me, I've ended up, I sit here and I get bored, and I'll end up buying, even though I know, the rallies are probably not going to be sustainable because we don't have the volume in the markets. As we can see, volume started coming down in December. And if we look at the Bitcoin chart, okay, December right here is when volume started to decrease. So this rally right here, there was not a lot of conviction in this rally because the volume was coming away from the market. So that was a leading indicator that was a top. And there were other top signals here that I won't get into, but that was the big one, is that volume was dying off while prices were trying to go higher. It doesn't work. And so that was the same thing here, where volume's coming up here, but price is coming up here, but volume is going down. Not a lot of conviction. So I mentioned expecting some resistance here, and so far that's what we're seeing. Now the question is, are we going to get a lower low or are we going to get a higher low? And we just don't know. We did have peak fear in the market right here. We haven't seen these levels of fear since literally the end of the bear market. So it's very important for markets to have a sentiment reset and a sentiment flush. It's I think it's the mechanics of it too, where that fear comes into the market and everybody who's going to sell sells. And then where do you go from there? Well, you've formed a base. You're not going to go much lower than that because everybody's already sold. So then prices go higher from there. And then people who did panic sell, panic buy back into the market, causing this flow up. So something to keep track of. If we go to the daily volume, the only thing I can see right here is on the very, very short term, we're getting a little uptick right here. So if what I would like to see is us start to form a base above this $25 billion level, and any coming down below here would be a really bad sign. And, we might have to rethink some things, but we're not there yet. We're seeing a little uptick here, and we'll just have to see if we can, just like back here where things kind of went more flat, but we were steadily starting to see higher lows come into the market. Hopefully that's what we see over the coming month or so. And so we'll just see how that happens. And the ETF inflows and outflows, I have talked about this before, but I'll briefly. Most people on YouTube use this as, there's a lot of buyers, so it's a good time to buy, or, there's a lot of sellers, it's a good time to sell. And it's really actually the perfect contrarian indicator, because the masses get it wrong at the extremes. So just taking this right here, for example, this was the largest weekly outflow, in quite some time. And that marked the very bottom of Bitcoin's price, and it went up from there. Now, we did have the largest inflows right here, and then you can see from there the market went higher, but not very much higher. And it was you can see that it's much less steep than it was. So it didn't call the exact top. That's not what I'm trying to say. But, also this high weekly volume here did call the top of Bitcoin's price. And we've had massive outflows. So massive capitulation, massive outflows. And so I find that's what I would like to see. I mean, I like to see that there's a lot of outflows and a lot of fear in the market. Usually is a good sign if you're looking for a bottom. So there are positive signs out there, but until we get the exchange volume to cooperate, I wouldn't expect the rallies to be sustainable. So again, I bought a little early because, there were some signs of strength and everything, and I don't always follow my own advice, which is why I'm here to help you. Don't do what I do. Listen to the words of wisdom here. And, if I were to heed my own words of wisdom, I think I'd be in better shape too. So Let's see. And not that I'm worried about it. I just really like crypto and I like buying crypto. So if it goes lower, I buy more. And then when you ride the wave up, it's like it never happened, and you forget where you bought, and it doesn't even matter because you're making money. So you can be a really bad trader and make some money in this game. So what else did I want to mention? There's two other things, a couple other things. One thing that is concerning, and I don't usually look too much into this, and I don't use a lot of moving averages in general, but if we go to the daily and we turn on the 200 period moving average, which is here we go, which is the 200-day moving average. As you can see, typically in the bull market, price respects this level. And if it does dip below, usually you're looking for a V-shaped recovery to give you some confirmation that that this was a fake out. So the last time you can see that this happened, it was approached from the underside, got rejected, and then we went into a longer, drawn out period of downturn. This was a year. It doesn't look like much on the charts, but that was an entire year right there. And we go back in time and we can see it's respected it. This was COVID, so quickly below and up, kind of a black swan event. Same here, violently below and then quickly back up to gain support over the entire bull market. And then the last time, yeah, this is another time. I think there's another example even farther back, perhaps. Yep, right here, where bull market's coming along, we get rejected from the underside, and a longer drawn out correction. So I'm not trying to make things fearful or anything, but I just wanted to mention that I am seeing a couple signs here. We're getting a rejection here. If we break these bottoms, that's going to spell a lot of pain for the crypto market. So it's something to keep track of very closely. We've broken below these tops. But again, if we throw up our 50% tool just for the entire bull market so far, here, let me. For the entire bull market, we have a long way to go. We have a lot of room to the downside to still be in strong territory. And so far, we've corrected, about 10%, which is quite a bit in the S&P 500, and then 20% is considered a correction. So, and those are, I haven't done a lot of measuring on the S&P 500, but 20% is a pretty sizable correction, and we would still be on top of our 50% level there. So not something I use a lot. Moving averages I don't use a lot. Every now and then, I'll throw them on there, but I don't really use them necessarily much. But something to keep in mind, something that somebody pointed out to me, and I was like, oh well, worth checking out. Wrapping these things up quickly. More weakness in the dollar, which is good. So if you're not aware, the dollar and then assets priced in dollars are inversely correlated. So typically, unless there's other supply and demand factors, if the dollar's going up, assets priced in dollars will go down. It's kind of a headwind to asset prices. And then as the dollar comes down, that's typically a tailwind for assets priced in dollars. So, and I can get more into that someday. It's a pretty easy concept to understand, but it take a little bit longer than I have for this particular video. So, but either way, we had a overbalance in time and price to the downside for the dollar, probably around here, and then we broke through this swing low and then this 50% level. So just layering signs of weakness, and now we've had some nice confirmation from the underside, getting some rejection here. So a further weakening of the dollar is going to be really good. And if I believe we will probably even breach these lows, which will be really good for crypto. That might be it. The last thing that we really need to continue to keep track of is the USDT dominance, and that is this is the percentage of the entire crypto market that is in cash. And so as this increases and as the percentage of dollars as a percentage of the whole market increases, really what that's telling you is that people are taking their money from Bitcoin and altcoins and putting them back into stable coins, meaning they're selling their assets for dollars again. So typically that's why you'll see prices go lower. So what we're looking for in Bitcoin, are we going to get a higher low or a lower low? In the same respect here, we want to know, are we going to get a lower high or a higher high for the Bitcoin dominance? So far, we have been able to maintain below this trend line, and we will just see if that continues to hold. So we are really, I think, within probably a month of having some more data that's going to give us even more confirmation one way or the other. Where's Bitcoin deciding it wants to go? So this is a really messy chart. I better get to the weekly time frame. It's still pretty messy. Yeah, this is others dominance, and man, this is really super messy. This is others dominance, which is the dominance of everything besides excluding the top 10, basically. So this is like the entire altcoin market, and what we want to see is this dominance rise. And so we may be looking at somewhat of a double bottom here. And if I zoom out, ignore some of the squiggly lines here, we're in this giant kind of triangular pattern here, and would love to see this break out of this triangular pattern to the upside. And then we have what these are basically levels, projected levels for this double bottom. I can show you how to do that later, but this is just, trust me, that this is one way to get an idea of where this double bottom may project to. And so, yeah, the 1.5 level is quite common. So, having the dominance of these increase by almost 100% would be pretty significant. Bitcoin has absolutely run the show this entire bull market. I think a lot of people have been expecting a lot more out of altcoins, but there's only been kind of periodic surges in the altcoin market, and people are starting to doubt whether or not there's going to be a full-blown altcoin season, which is usually when the altcoins go on a rally for 8 to 12 months. But it usually happens in the very end of the cycle. So to me, it doesn't seem like anything's different has happened. And we've had a few beautiful pumps in the altcoins. So plenty of opportunity to make some cash there. And I think that's basically what I'm waiting for right now. So because we've seen kind of a nice measured correction in Bitcoin, typical to what it's usually seen, and we have the fear coming into the market. There's another sentiment reading that I've been made aware of, and I'll have to look more into it. But either way, over its several decade history, if you go and you look at their surveys, when they survey their the people that they're serving, they ask them if they're bullish or bearish on the market over the next 6 months. We just had another all-time most bearish reading for their sentiment, and the masses usually get it wrong. Always get it wrong at the extremes. I'm just going to say usually, because nothing is 100%, but the masses usually get it wrong at the extremes. And with these surveys, typically they're the most bullish at the peaks and they're the most bearish at the bottom. So while we are seeing signs of weakness, there are other signs that a bottom may be in or close to in. And that's why it's always a moving target, because the more time goes on, and the more data you get. So that's basically where we're at right now. And so far, we'll just have to see. We're just going to have to see where this ends up. I think in the next few weeks, Bitcoin, the market's going to tell us whether it wants to go down before we go up, or if we're going to go up from here. Is this a higher low and then we're in an uptrend? And so time's just going to have to tell on that one. So I think that's enough blabbing on for one week. But this was just me going through live. This is what I do. I just check certain things out. I don't expect higher prices for these assets until we get the volume increasing, and we will probably know in the next couple weeks, by mid-April, hopefully. We'll break out of this particular. We're kind of, like I said, at a crossroads. Are we gonna get rejected down, or are we gonna bounce up? and we'll find that out in the next coming week. So I'll just keep you posted on what I'm seeing in the markets, and hopefully that helps us get an idea of, if you tune in time and time again, you're just gonna start to see certain market behaviors that repeat over time. And that's the fascinating thing about it, is human psychology is the most predictable, I think, part of the markets, which can be represented by volatility. I'm just going to leave you with one more tidbit because I can. I kind of consider volatility to be, just in my own interpretation, somewhat of a proxy for human emotions. And you can see, maybe I'll put this on a daily time frame. I always go over time. I was trying to keep this short. But you can see that typically when volatility is relatively low is a better time to be interested in the markets. Volatility had formed a base here, nice and low, and that would have been a great time to get in the market. We had our overbalance in time and price. If we bring this back even further, this right here was like the lowest volatility reading we had seen in forever, and it was like the perfect time to get in the market. So if you go back and kind of back test this, it's not a perfect thing like if this, then that, but you can be more confident that you didn't want to be getting in the market right here because volatility was, at its peak. We hadn't seen any higher volatility in quite some time, and getting in the market, just right here is not the best time to be getting in the market. It's high volatility, and we have no confirmation that overbalance in time and price. We're in weak territory underneath this trend line. You can see that just a less desirable time to get in the market. And the other thing too is if you get in while the volatility is lower, that means the price is moving a little bit less. So maybe you're not going to get as freaked out when the swings aren't as great. So your emotions will probably be a little bit more in check. But anyway, I'll just leave you on that last little tidbit. I'm done for this week. Maybe I'll post some things if I see some fun things or we get some exciting breakouts during the middle of the week. Maybe I'll post on that. But other than that, we'll just see you next week, and take care.